Well, good afternoon. Good afternoon and welcome to another of our Webinar Wednesday series, number 10 in our pandemic relief. I'm Kelly Bearden. I'm the director of the CSU Bakersfield SBDC, or Small Business Development Center, and welcome. Welcome to those of you that have been on since week one, going back all the way to March 18th, when our first one talked a little bit about the disaster loans and have kind of evolved from there. We'll be back next week and probably throughout the month of June, as long as it's needed, to try to bring you the most current information on this particular SBA program that we have with the Payroll Protection Program and with the EIDL program, the Economic Injury Disaster Loan. So we got a lot going on today. You're going to see a little less frills today out of us and a little bit more content, since we did receive the 11-page SBA final application form for the protection program's forgiveness policy, and we'll be covering that in great detail today. So you're going to see a few less slides today, a lot more interactive stuff, and trying to dig into this thing, which is really a lot of information for us. So we're part of the America's SBDC program, a nationwide program. The SBDC program has been in existence since 1980, funded out of your tax dollars and through the Small Business Administration. And here in California, we have 6 regions. We're part of the Central California region. And you see the 3 counties that we serve out of our offices in downtown Bakersfield, and that would be Kern, Inyo, and Mono counties. So I like to think of it as kind of like a boot, kind of like Italy, but we lost our heels somewhere. Other centers throughout our region are centers in Clovis, Merced, Modesto, Salinas, and at San Luis Obispo. So we're available to help you with your businesses. One-on-one consulting is always free of charge, a lot of training programs, and we're going to do even more webinars as we have time to get past this particular issue. So thanks to our many sponsors out there that make this program possible today, and appreciate all those support that we get from those. And let's talk about what's new today. And that is basically what we've been doing for the 10 weeks now, is talking a little bit about what is new today, because we know what is new today is not going to be what's new tomorrow. So today we're going to really focus on the forgiveness form, the SBA form that was released. Many of you may have seen. If not, we will have it included in some of our updates today. And so we will have a number of items that will be sent. So you don't need to get into the chat box and ask. We will send a copy of today's link. We will actually send a copy of the SBA 11-page form for forgiveness. And there's a few other things that we'll show you that we're adding, including our kind of Excel spreadsheet and a couple of other things. So no need to do that, but do go to the question and answer box and put in your questions, and we'll have plenty of time to join it with our special guest and get to your questions as we kind of roll on today. So we're going to focus on forgiveness, and it's all about forgiveness today. And we're going to also talk a little bit about quick updates on the EIDL and PPP programs, on what's going on. But again, the main focus is going to be on the forgiveness, as it will likely be next week as well. And then also your questions, as I mentioned. But first, let's kind of go up and look at a couple of our polls. And it's going to be a streamlined poll today, as we're trying to cut as much of the time as possible. Let me launch the first poll, and I'm asking the question today: when you received your PPP, what was the date? And you're going to have 4 or 5 different options. The first is going to be, as we launch the poll, May 5th or earlier. I received it on May 6th, received it after May 6th, on May 7th or later. I've yet to receive it, or I still want to apply. So jump in and give us an idea of where you particularly stand. May 6th is a significant date that we'll get into in just a few minutes. And give you another couple of seconds. We have about 55% of you that have voted. Again, we're asking for which date you received your PPP loan. And that is when you received the funding for that, which is the official start date. And we're going to end the poll. Got it, 65% of you. Thanks for voting. Gives us a great sample. And share the results with you in a vast majority of you were the, what I like to call the non-procrastinators. And 56% of you got it at May 5th or earlier. Actually, 11 of you hit May 6th right on the dot. That's kind of amazing, larger number than I thought. And then many of you received it after May 6th. So 7% or 6% have not received it yet, but are still probably in the process. And just one of you want to still apply. And, you know, there is funding, so you can do that. But this is real interesting. And the reason this is rather significant, because if you go from May 6th, when we hosted our 8th webinar on this series, it was, many of you have called it our birthday episode, because what new on that day was 3 birthdays that we celebrated on May 6th, including Willie Mays. And what you find out on May 6th, if you move forward 56 days, it takes you to June 30th, the end of the PPP process. So those of you that have May 6th and later, the forgiveness process is going to likely be a little bit simpler and maybe easier to manage, because this really is about helping you manage the PPP to get the full maximum for your particular business moving forward during these difficult times. So thank you for that. And our next poll is just going to be one that we've been asking, and we just want your current status if you applied for the EIDL program. If you applied for EIDL, what is your current status? It's yes, I will receive or have received an EIDL advance, received an EIDL loan. No, I have not heard or received, and I applied before 3:30, and no, I applied after 3:30. So we'll launch that poll right there. EIDL advance is the 10,000 or less that you might have received. The EIDL loan, of course, is the larger 30-year term loan. So voting is coming in. We got about a quarter of you voted so far, and majority are yes, I will receive or have received the advance. And the other 3 are kind of split evenly around the 15 to 20%. So keep them coming. We're up to almost 40% of you that have voted. Get a few more of you in. And then what we'll do is close the poll, share the results with you, and move on with the rest of our program. So here's our poll results here. Almost 50% of you, half of you, have received or you have been notified you will receive the EIDL advance. 21% of you have not heard and you applied after 3:30. And 3:30 is kind of the magic date with EIDL, because that's when they shifted to the online platform that was earlier and easier. And 14% of you have received that very coveted EIDL loan. And the EIDL loan, really the magic date for that, I go back to March 18th, the first webinar, because if you got in then, you were actually in good shape about doing that. So thank you for joining our polls today, and we'll move on. So it's a pleasure again to reintroduce, I should say, our special guest, who is appearing on his, I believe, his 4th, maybe his 5th of our webinar Wednesdays on these particular topics. It's great to have Keith on board. And it is fantastic because he brings so much expertise. You can see his bio. I'm not going to read that. But Keith, I will tell you the things I'm proudest of Keith. Number one, he is a recipient of the John Brock Award, which is for community service in Kern County, and a very, very, very prestigious local award. But he's also the largest lender for SBA loans by volume in Kern County, with a portfolio that's approaching $500 million. Keith, thank you for joining us again today, and welcome.
Thanks, Kelly. It's exciting that we have some additional information on the forgiveness. So we're going to jump into that. And I would be remiss not to share that we submitted a SBA loan, a non-EIDL, non-PPP, regular SBA loan last night and received an approval this morning. So we are getting less than day turnaround on other SBA loans that we're doing here. So we're excited in the office. I have all my staff back from the oasis of working remotely. So there's a certain amount of synergy that we're getting around the office again.
Well, it's great to hear you're all back. The SBDC is not all back, but somebody's got to take care of when there's an accident, traffic accident on 17th and 8th Street. And that's, I guess you guys are now running out.
That is us.
One of the more dangerous intersections I found out in Bakersfield, and amazingly. So Keith, welcome for joining us. And let's start in first with a little bit of EIDL. The EIDL program has been a little bit slow lately. It is still open for agricultural businesses. The portal is open. And actually tomorrow, if you are an ag business and want more information on EIDL and PPP, the SBA will be hosting a webinar on that particular subject for ag businesses. It will not pertain much to what we're talking about today, but if you know somebody who has an agricultural business and hasn't got in, wants more information, tomorrow is the time to do that. We're seeing some more of the EIDL loans come in at around the 150 window, which we now assume is the highest loan that they're issuing. Keith and I saw some earlier ones come in at about 500,000, and then it seemed like they went down to around 300, the $300,000 range. But with the popularity of the program, 150 appears to be the ceiling on that. And there's some information for you if you want to call and find out more about your particular application. We did see a lot of you at 3:30 and put in after 3:30 your application, and you hadn't heard. So, Keith,
Kelly, I want to emphasize calling. This week, I've had 2 borrowers that had a loan number. Unfortunately, it started with 3, and they were wondering what was going on with their EIDL. They both called the 1-800 number, and within an hour got through. So there are folks on the other end of that number, and to a person, I have not heard of any negative experience dealing on the other end of the phone. They may not have gotten the dollar amount that they were looking for, but they did get a response. As you mentioned, the focus right now with the EIDL is in the agricultural community. I fully expect them to pivot from there sometime, hopefully soon, and open up the EIDL portal for non-ag related businesses. Hopefully there's still enough money, and we'll talk a little bit later about some of our predictions on where they may even shift some of the PPP allocation to EIDL. All things are on the table right now.
And the only thing I will add to this before we move on to PPP is that we've been talking about the EIDL advance, and we talk each week about and speculate about things that we think we know that week. And we've been talking about the EIDL advance being an unforgiven portion of your PPP. And apparently that's a little bit up in the air right now, because in the CARES Act, it says that it's supposed to be forgiven, whereas SBA's interpretation, as we've heard it, has been that it will be, and it's on the form as being included in the PPP forgiveness form today. So we'll keep you posted on that moving forward, but hopefully we'll have final rules out on that particular issue soon. So still time to get your PPP application in. And as I mentioned earlier, boy, it pays to be a procrastinator in this particular program. It really worked out for you. You can get in as late as possible and have the longest window for when we hopefully reopen our local businesses here in Kern County and elsewhere. But there are a lot of applications that are still there, and we're still expecting more interim final rule guidance. And, what we think today might be different than what we find out is the actual norm, but a little of what we're finding out is what the final rules could look like, and that impacts our discussion today. So today we're going to go into a few issues. I think the greatest thing about the release last Friday night was the FTE issue being resolved, and we'll get into that. So that is a big issue. As far as the final rules, we're expecting a fix, and the fix could come in 2 phases from both SBA and Treasury, and also a congressional So Keith, this is our opportunity. Let's speculate to where we think potentially, from what we've heard and some of our sources and media sources, where that actual those actual fixes could come from.
Yeah, it's interesting. I think today there's a hearing on the Senate floor on part of the stimulus program and part of the issues. And one of the areas that have been talked about and discussed is extending the timeline. And I always try to, get some information from what are they talking about. An example is the head of Treasury is looking at it's a bipartisan agreement that the 8 weeks is not doable. It's not doable, obviously, for the reason that a lot of the states, including California, still had a stay-at-home type of scenario and weren't allowing small businesses to open. So you could not, if you got your PPP loan and could not open, then that's a whole issue there. So there's discussion where they're talking about, do we extend it to 16 weeks? Another example is the restaurant group met with the president on the 18th, and they asked for 24 weeks. So one of the things that I fully expect, and this may happen very soon as in today, tomorrow, or shortly after, that you will get some type of extension on the timeline. I think everybody's in agreement that needs to be extended, and hopefully it can be done easily, whether it's an SBA fix or whether it's a congressional fix. So I see that happening. The other area that there's been a lot of discussion on, it's the 75-25 rule. And obviously that's the 75% for payroll and 25% for other expenses. There's a lot of discussion in that the intent of the stimulus bill is somewhat centered around the employees and the small businesses, but there are some small businesses that cannot meet that 75% rule. So there's a very real probability that they move it to 50-50. Again, there are some folks in the Senate and I think in the House's proposed bill that they were going to shift from the 75-25. So I expect that to happen. And the last thing there's a lot of discussion on is oversight. Well, we saw earlier where the SBA came out with, if you're gotten a PPP loan over $2 million, expect to have an audit. So then you had, sort of a mysterious mad rush of a lot of the larger publicly traded companies deciding, well, the PPP wasn't for them. I know there are some discussions about, releasing specific company information on who got the PPP loans. And that's sort of a twofold and sort of a dangerous track to go down. An example is what we've had that happened here. We've received 2 phone calls from employees inquiring if their company got a PPP loan because their company is trying to reduce their hours and furlough. Obviously that kind of information is private with the SBA and the lenders, but there is a lawsuit pending from a news organization against the SBA to get a list of what companies receive the PPP. Not sure if the purpose is determining their need, or is it an employee-based type of suit to find out if they're complying with it. So I expect some more oversight. I don't think it's going to be onerous. It's probably going to be more in the certification area, which you're already having to certify, but a little more teeth into it. There is a senator that wants some type of penalties if a certified business, in fact, somewhere down the road, it's disclosed that they did not use a PPP for payroll. So those are the areas, Kelly, that I really see changing. I think the 8-week period is going to be modified fairly quickly. I do think that the 75-25 may be adjusted. They're not going to get away from the whole intent of the PPP for payroll, but there may be some changes there.
Yeah, and the other thing that I might even speculate on is that the term could go longer for the unforgiven portion. Now, recall there are some very specific items that you can spend this money on, and we'll cover them and have covered them over the last 10 weeks. So going out and paying your suppliers and other working capital needs aren't really, right now anyway, unless there are changes made, a basis for the PPP program. However, what you might find is that the term, which is after the 6 months that are forgiven, is basically an 18-month term on paying the rest of the debt. And that could get extended out to 4 or 5 years. Certain business groups like the National Federation of Independent Businesses have come out with a longer term on stuff like that and are actually advocating for that at this time.
Yeah, the challenge, I think the challenge with that, Kelly, then that would require a amendment to the note that the borrowers are already signing or the agreement. So, which is, it's not a hard thing to do. But that would then have the borrower going back into their lender and signing another agreement. So I guess all we can say is stay tuned and see what happens. But I do definitely think there is going to be a change on the 8-week period somehow fairly quickly.
That is not very popular. The other thing I'll mention and throw out there that we talked a little bit about last week, or quite a bit, was the SBA FAQ that came out, and essentially for PPP's loan amounts that are 2 million or under 2 million, they actually gave you the safe haven certification, meaning that with the larger 2 million and up, you have to prove that you really needed that money, or you potentially might have to. Whereas if it's less than 2 million, you're not going to have to now. And that was a relief for a number of our businesses who had an unexpected sales gain, such as nurseries and maybe some hardware stores and others that were operating, that when they did the application process, they thought that they were going to be impacted far more than they were, given what happened with a lot of the stay-at-home rules. So let's keep posted. SBA has mentioned when they did release the form on Friday night, the forgiveness form, that there would be, and they realize that there are final rule fixes that have to come, and they hope to have them out as soon as possible. So maybe we'll have those for next week as well. I tried to stay away from a lot of these large slides, but this one was on. I'm just going to cover a couple of items on this because this was in the SBA press release, and I thought it was rather telling on the actual order of how they listed the changes in the new forgiveness form. And they led with the alternative payroll covered period. So they gave us 2 options in order to use the actual 56 days moving forward from the date of receipt of your funds, or an alternative payroll covered period that was kind of presented to them by the American Institute of CPAs, that actually mentioned that it would be maybe better to align that with the borrower's regular payroll cycles. And that is going to show, I'll show an example later where this could come up. And then the other thing is, is what I think is really the borrower-friendly implementation of the statute exemptions of loan forgiveness, which is their way of saying that the full-time equivalent and the reduction of forgiveness for full-time equivalents can almost be eliminated through a safe harbor by rehiring and having the earlier maintained payroll levels by June 30th. And that is really where I come up with the May 6th date, because May 6th gets you out to June 30th in that payroll cycle to where you can afford to bring people back by by June 30th. And I do understand that for those of you before, and there was a significant number, more than half, that those are still issues that we're going to have to work through and discuss and see what's best for you.
Kelly, I think those were, when you go through the whole PPP forgiveness application, I think those were the real meat and potatoes of what was released. And you could think about some other potential changes, but that was the first step that sort of let me know that, okay, one, they're going to be flexible in, the hiring period. They're going to be flexible if you have employees that, quite frankly, are opting for unemployment as opposed to coming back, and not really penalizing the small business. So again, that's a sense of, all right, we're going to be flexible here. Stay tuned for some more flexibility.
Excellent. And this is basically what we got. We got it on Friday night, came in about 7 o'clock. I was in my second glass of a fine red wine from one of our better Kern County vintners up at Triassic Vineyard. It's 2016 Zinfandel, excellent. Enjoying a little birthday celebration, and then this lands right in the middle of my lap on Friday night at 7 o'clock. So since then, we've been going through everything, and happy birthday to me. Here you go, PPP Forgiveness Application form. And so these are the four main parts of it. And let's just jump into the document, though, first and foremost, and kind of go in, because it's a lot easier than me putting it on a bunch of slides and you reading. For those of you that have not seen the actual application form, let's pull that up right now. And what we'll do is we'll pull up that particular form, which is, or was here earlier, and is not here now. Why did you do that to me? But it did. So let's keep looking, try to manipulate. Okay, well, that didn't work out so well. Let me go to a Google link and try to get it that way. Maybe go here. Sometimes these like to hide on you, and this one did, but there it is. Got it back. So there's your Payroll Protection Program loan forgiveness form, 11-page document. I've kind of blown up for you, but what I want to do is I want to go and do something that I have a bad habit of doing, and that is looking at documents backwards, because this was finally the first document that I have seen that actually, in a long time anyway, that actually makes more sense looking at it from a backwards perspective. So I'm sure there's a few of you others that'll go back to page 11 and then thumb through something backwards first the first time you see it. So if this is your first time, we're going to do this right now. And the first or the last page of this document, and maybe the only optional form in here that we're going to need to provide, is some demographic information. And this has nothing to do with your forgiveness or anything. It's just what SBA does as far as try to measure the demographics of who is actually participating in their programs. It's information that Congress wants to see the effectiveness of how they're reaching underserved markets. So very easy, optional form. Again, it's optional. I'd like to encourage people to do it because it does provide more guidance and maybe makes the program a little bit better.
Kelly, it's very surprising that they made this form optional, because they typically love to measure, the effectiveness of reaching certain markets. So it's very interesting that they put this as optional and not a required form.
Now, Keith, on most of your regular SBA 504 loans, is that a document that you have to include?
It's required, yeah. There are certain advantages, whether it's a larger dollar amount or certain criteria that if you meet a certain specific area, veteran-owned business, there are some advantages. So it's a must that that part of the application is completed.
Yeah, and for signing up for Small Business Development Center services, you are asked those questions, but they do give you an option of choosing not to answer. But other than that, it is pretty much typical of most SBA programs, so it is fairly typical. So that gets us back to what I think is really kind of the meat and the potatoes of this, and that is going to be kind of some information on a worksheet that is actually going to jump in and demonstrate a lot of what is in this particular loan forgiveness application. And so here are the instructions. The nice thing about these 11 pages is you do get line by line instructions. But really, the first place I would start on this is I would start with this right here, is I would start with the PPP Schedule A Worksheet. And I think the worksheet is very important from the standpoint of you essentially need to complete this first and foremost before you move on to complete the Schedule A and before you complete the actual PPP Forgiveness Application. So the key thing here is listing, and you can do this by a couple of different sources. The one thing that you're going to run into is that you're going to probably need to prorate at least one of your payroll expenses, or expense periods. And, you know, hopefully the rule that gives you the alternative method will get a lot of businesses through, but there are certain businesses that are going to have to do at least once and possibly twice to where you have both covered and uncovered amounts of payroll during that period. Save that thought. I'll get to it in a demonstration from an Excel spreadsheet that we have coming up in a little bit. But the key thing here is you're going to need to list the employees, and the top one is for those that earn less than $100,000 in 2019, or were not employed by the borrower in 2019. So that's what you see. It's basically the name, the employer identifier, the cash compensation. We'll get into what is required for the average full-time equivalent, the FTE, and then any reduction that you have from individuals that earned over the 100,000 for those that actually earn and have a principal place of residence in the US. The second table is for those borrowers that are generally annualized and receiving compensation from the program that earn more than $100,000. And that was earned the $100,000 in 2019. So you could have an example to where during the period they didn't earn as much, but if they did it in 19, the compensation needs to be broken out. And so this is really your first step. And it's either going to take listing, and some of you might have 100 employees or more. And it's going to take listing this out and listing the employer identifier as the last 4 digits of their social security number, and then put the compensation that is earned during the 56-day period, either the covered period or the alternative period that we'll go over, and then calculate your FTE. If you line up with this program perfectly, and in my example, I did, and I didn't even try, you can actually get by with your payroll reports as a substitute. But in most cases, I think it's going to be very difficult to line up with all of the pay periods within that 56-day period, that 8-week period that we have to go for. So this is going to be your first step. And this will come in handy for a number of reasons, but the number one, it is the first step and provides the data for Schedule A. So let's go to Schedule A. Going backwards as I do through my documents. We come to the instructions for PPP Schedule A. And the most important thing I think on the Schedule A worksheet, the instructions that we just saw, is it does get into some calculations and gives you some determinations for the FTEs. And I think the FTEs are almost an entire webinar by themselves, but this last paragraph is extremely helpful from the standpoint that it does provide a safe harbor. It provides an exemption by having the number of employees, and it actually reduces the levels. If you had a reduced level, like many people did, that ended on April the 26th because of layoffs, and because really this event really started happening right around the middle part of March, and people were laying off employees after that. So it really kind of takes into consideration the FTEs here for that period. and then also gives you an election to use a different period. So we completed that information on the actual worksheet. And here's a lot of more of the detail and instructions. We go back now and continuing to go backwards, we go to the Schedule A. Now, the worksheet is not required that you submit to your lender. It is a worksheet they might want to see in order to come up with the information that you put on Schedule A, but it is not submitted to SBA.
Kelly,
Schedule A.
You are required to maintain that worksheet though. So you don't have to submit it to the lender, but whatever you do, you keep it with any vital records that you may want to maintain for a time period. And I would strongly suggest that you maintain it a minimum of 2 years for that documentation.
Yeah, it is definitely your backup. It is your support, and it is going to really prove your payroll and prove your FTE. So it is vitally important, and why we kind of started with it first. So then we come up, the next form will actually be, this was the actual PPP Schedule A. And it just lines up. And the thing that's going to be interesting with this is that we have 5,000 different lenders in the PPP program. You've heard us mention previously, there are about 1,600 nationwide. And each individual bank is going to have their individual format that they contact you with. You know, I hope to get on some of our local banks and some of the individuals who are going to be working on this as a guest later on, and to show exactly what they're looking for and what they need. But really, you're taking this documentation when you go to seek forgiveness, you're taking it to your local lender. And lenders are going to have different requirements. It's going to be the same rules and regulations, but they could have some other aspects of what they want to see and what they don't see. So it's going to be kind of driven by your particular individual lender as well. And there'll be processes where some lenders have digital versions where you can enter the information online. Some of them will have paper copies. It'll just be really kind of unique and individual to your lender. So keep that in mind.
Kelly,
So, go ahead, Keith.
I'm sorry, I interrupt you. I'm also hearing that there are a lot of lenders that are going to be utilizing third-party vendors for the calculations. Quite frankly, it's one of those where, because it is somewhat time-consuming, they're better suited of having their staff working on other areas in the bank's needs. So they may have a contract with a third-party vendor to proof this information.
That's a good point. And another thing is that I think in the past we've talked a little bit about all these we're going to come due at the end of the 60-day period. But essentially, you have during the entire 6-month window. Now, I wouldn't use that entire 6-month window. I'd leave a couple of months for processing, but I believe you're going to have 3 to 4 months afterwards in order to still get this information in to get the forgiveness. Because remember, we do have a deferral period for 6 months, and I think a lot of lenders are looking at that as a time process in order for them to facilitate a lot of this application process. So it's not going to be entirely crucial, but I know a lot of you are going to want to know how much is going to be forgiven and get that information in as soon as possible.
Hey, Kelly,
so you see a lot of the.
Well, I apologize. In that same area, there's a lot of companies that use different payroll services. And one of the documentation that's going to be required is their quarterly 941 form. And depending on when you are using or submitting your request, you may be in a weird quarter, so you won't be able to submit your request for forgiveness until you get that form, and that may push you into September. So as Kelly indicated, the timing and the information that you're going to be needed to be provided may not be the same. So just be aware that with the required information, it may take you 30, maybe 60 days before you can actually request it.
Yeah, I'm glad you're interrupting, Keith. You're here to interrupt. So don't feel Sorry for that. Moving on to page there's the instructions for Schedule A. And then even moving up, then you get into the loan application. I just want to touch on a couple of items on the application form on this part of it, because you are making certifications, and that essentially you're capping your most compensated employees at $15,385. So there's a number of items in here that you're going to be certifying to, and one of them is the use of funds. And remember, use of funds are payroll, utilities, mortgage interest, rent, and lease payments. So there's not a lot of give, at least at this time. It could change, but there's not a lot of give at this time for that particular. And there you sign that. So one of the other things it says in here as far as tax documents, and you know, a number of our small businesses that are self-employed, they actually put in a 2019 tax return that hadn't been filed in many cases. Talked to several people that did that hadn't filed, but they didn't have to as long as they completed an accurate 2019 Schedule C in order to get the loan. Now, the key is, now that you're going to file by July 15th, you really need that to batch up and be accurate. And if it's not, you need to look at certain ideas. Number one, if there's a discrepancy, in order to fix that before you get to this part to where you're signing the document. Moving ahead on this other application, here's the rest of the application, and it just moves a lot of the numbers forward that we've already looked at. Some of the key things, there's just contact information at top, your employees at the time of the loan application, and your employees at the time of when the forgiveness application goes in. Two very important times of counting toward the forgiveness process. We'll get in a little bit to payroll schedules and using the alternative schedules that are out there, payroll times. And so that's going to be your application right there. And a lot of it is costs that are moved forward from other places on this document. And that's more or less your 11 pages right there. Couple forgiveness rules at the very beginning. This will be included in an email that's sent to you. You all can have it and look at it. If you haven't found it already online, I'm sure a number of you have and looked at it. But that's a little bit about the application form. I want to switch bases right here, and we will go along as always it appears. But anyway, I just want to give you a quick example of how this might work moving forward, some of the questions, some of the tracking, and how it has changed, and some of the other aspects. So for those of you that have been around for many of these, in some of our examples, we use My Grill, which is now an LLC. And in My Grill now, I absolutely gave myself a raise, and because I wanted to compensate myself over the $100,000 threshold. A typical, you know, a somewhat typical, you know, nice, very nice restaurant, you know, does 1.3 a year in volume, and there's their payroll expenses and the owner compensation, net income before that. And the reason that's important is that's how we came up with our PPP amount in our application that the bank funded. So I had an exclusion of $20,000 because of the $120,000 salary. My net payroll, oh boy, isn't that ironic? Look at these nice round numbers. 40,000 was my average payroll. Applied the multiplier factor of 2.5. I know some of you have a different factor, maybe 2, but it's still the same principles moving forward. And there's my 75% minimum payroll amount. And I say minimum payroll amount because I can go over 75%, and I think I likely will, unless I'm paying myself. And that is something that was news in this release as well, because I think last week I came on and said you should be fine if you're self-employed to take 100% of that. And actually, the way the math works, it's 80% of that. So that's something that kind of shifted in this particular aspect. Was we assumed the maximum for the compensated employees of over 100,000 would be around 15,385. But we did not know that the self-employed, those independent contractors and others that relied on Schedule C income, essentially it's going to be the amount for what that actually was calculated, which you know, it's math, so it's 80% instead of 75 as far as the payroll here. Hopefully I'm not confusing you too much. We'll build this out as we go, but it just kind of shows my full-time equivalents. And by position, I had 2 full-time employees, 8 full-time, 2 more or less chefs and supervisors, 8 general people. And I had 8 part-timers that all worked half-time. And then there was myself that I capped my salary obviously at 100,000, at least in this example. So we'll move that forward going forward. A sheet that you saw last time, and this is my forecast for tracking the PPP loan expenses. I withheld this from Friday's e-blast, so I know a number of you sent me emails on this particular, because I had kind of learned that there were going to be changes and I didn't want it to be obsolete before I sent it out. We will include it in this week's. The nice thing about this is it kind of gives you a forecast, and if you don't want to do the cash flow forecast that I talk about every week, then you could at least kind of forecast here and give you a good idea of where your expenses are going to fly. Now, my period here begins on 4/20, and I'm a weekly payroll. So going forward, actually at 4/20 was the beginning of my payroll period. So my first period, my first week ended on 4/27, and these are the dates. In your examples, you're going to have to adjust those for the particular dates. And the important thing here is that it is 56 days from the elected start, but the actual formula is 55 days because you count the day of the original day. So mine ends on 6/14, of which either at the end of this period, I need to get up to my FTEs, or by June 30th, have my FTEs. Unfortunately, most of you don't end up that way, where everything is clean and cut and dried across all 8 weeks. And so that's a little bit of, there's my rent and my utilities that happen around the 1st of the month in both cases. And at this point in my example right now, based on my payroll, I'm about at $89,000, which is about 10,400 less than the total amount of my PPP. But that's how I'm projecting to spend it out. Management tools, all this is going to try to be for you and try to forecast how you can spend and how much you can spend to get full maximum once we know what all the final rules are. So that's Forgive Me and Forgive Me. And this is Forgive Me 1, which shows my actual results. And so I'm trying to keep track of my actual results and kind of move forward. And so then I keep forward to that. I also have Forgive Me 2 over here, which is a blank form that you can go with. Just pop in your own origination dates and do whatever you want. We popped in here just kind of the basic forgiveness application Schedule A for the worksheet, which I think is very important, as we covered earlier. And I got some questions, and thank you for sending me in some questions earlier. And I want to kind of go through those because I think it explains and helps explain a lot of what we're trying to talk about and get across today. So my payroll is bi-monthly, which I believe is the same as semi-monthly. And at the end of my PPP period is 6/28. So this example and the payroll periods and the payroll dates are actual. What I did was I just took numbers for gross payroll rather than use those examples. So what I'm trying to get across here is that theirs started on May 4th. Their 56-day period ends on June 28th. And sorry about that. So unfortunately, with a semi-monthly payroll, you cannot elect the alternative payroll. It's only for bi-monthly and less. So a semi-monthly payroll is going to be 15 or 16 days, except for February. And a bi-weekly is going to be 14 days. So they are stuck with a semi-monthly payroll, given the way I interpret the rules, as having to only use the actual payroll date. So they started on the 4th, their payroll started on the 1st. I'm assuming in my example here that these are all salary employees just because it's easier to get across. But if you look at my formula here, I have in 12/15, which is for a salary employee. Basically, you eliminate 3 days, May 1st, 2nd, and 3rd. 12/15 is 80%. So for their covered payroll, I have that amount of payroll, and this is the amount that you have that is prorated during that first period for this particular borrower. Okay, this is a real situation except for the numbers at the end of the payroll. So ending again on June 28th, you're going to find the two middle payrolls are going to be unprorated, but unfortunately you come back to that same problem where your payroll ends on June 30th, yet your PPP ends on the 28th. And so in this example, it's 86.67%. And the bottom line is you end up with different variables here. You'd end up with a gross payroll of 49.1, but your covered payroll that you actually use on your spreadsheet, on your PPP Schedule A Worksheet, breaking it out by each individual employee, is going to be 44,950. So that is in here, and it is one example, but again, it kind of really accentuates and shows the importance of your date. And so when we said May 6th is the magic day right now, it's because it goes out to 6/30, which is one of the safe harbors for the full-time equivalents as part of your forgiveness. Sound complicated? Friday night on my second glass of that wonderful Triassic Zinfandel, I did think that accountants are going to like this. Or maybe not, but my consultants, they absolutely love it, our consultants at SBDCs. So the second question, and it's not related to my example, but I just wanted to hit a couple of these at one time. And it was for payouts for vacations. And I thought that that was really interesting, and because we hadn't really talked about paying out maybe an employee who left. And it's rather an isolated incident, but I think it's going to come back to the maximum that we had talked about earlier in the 15,365, or actually, if you go back to your PPP original allocation, there was an employee and not paying more than that person actually had done. Real quickly, before we move on to other questions, we have the mortgage interest payments on debt. Does this include vehicle debt loans? Keith, I'm putting you on the spot here. What do you think?
Well, you know, it's interesting. When you look at the other cost that can be included, vehicle debt, if it's used for the business, can be part of the other expense, other interest area. I don't know if we want to get into the weeds of you know, what's considered utilities, what's considered phone, but there was a little bit of clarification, not a lot of it, but yeah, that could be included.
I agree. Last week I would have said no. I would have taken the mortgage interest payment as literal. And again, this is only the interest, not the principal portion.
That's correct.
But it did include, I did see the words mortgage or personal property. So some latitude there for a lot of our borrowers out there. We have an example for an independent truck driver. Can he take interest on the truck? And we just identified, yes, you can. And what about fuel or a combination? Last week I would have said no on fuel. Now I'm saying maybe, because last week we were going off a definition that had fixed utilities. This week there was transportation was in there somewhere. So I think there needs to be more clarification from my perspective.
Yeah, Kelly, they're going to be, I really fully expect them to be a little more flexible with that. Because again, you always have to go back for the intent of the CARES Act is to help the small businesses along with the employees. So I would be surprised if that would not be allowed. Obviously, you need your documentation, make sure you have that. I did see a question pop up across my screen on the 15,385. That's just 8 weeks. So if you do the math on that, somebody was trying to reconcile it back to 100,000. Well, it reconciles if you divide that by 8 times 52 gets you 100,000. So yes, that's an easier question today.
Yes, it wasn't very, we thought we knew the answer last week, and it ended up, I think we were correct, but this one is another one that I'm hedging on from last week. I would have considered workers' comp would not be part of payroll taxes, but now it says something about insurance, and I don't know if they're talking about if they're talking about, for example, term life insurance that an employer pays or potential, but it said insurance premiums. So any idea on that one, Keith?
You know, well, I'm trying to look at some of the guidelines as we speak here. I don't see that yet. I can't answer that question right now, Kelly. I'm looking through the guidelines as we speak.
Okay. Well, it's question and answer time. And we'll stick around for 15 minutes after, like we've been known to do, or longer if we have to. First question, do you have to hire back a part-time employee with the same amount of hours? Can you just hire them back for half the time? So I'm assuming, can you hire back a 20-hour person for 20 hours or bring them back for 10? It's going to be a tough question. Start off with a tough one, Keith.
Well, so you could probably do it, but it's just going to reduce your amount of the forgiveness.
Your FTE.
So I mean, that's, I mean, at the end of the day, you're trying to balance out what you had requested and what you're actually going to pay. So I could see that reducing the forgiveness accordingly.
And there was a 25% if you brought them back for no less than 25%. So let's say you had a 20-hour employee and 25% of that is 5 hours. If you brought them back at 15 hours, it looks like it would qualify under that particular part of the rule. And also on full-time equivalents, which we'll get into much more detail next week, is that there are options that you have. That's the great thing about the FTE ruling. There are options, and you have electable methods that you can actually calculate. And one of them was anybody who earns less than 20 hours, you can count as a 0.5 full-time equivalent. So, but actually hiring them back, the key right there for me is hiring back the same employee with less than 25% of the hours, I think is problematic.
Well, if you really want to go down a rabbit hole, you can take that same scenario. You make an offer and the employee doesn't take the offer. Are you protected under the safe harbor? And can you use your original FTE? And that's, I don't know. I know they're trying to be flexible, but that example, you may be okay.
Yeah. Final rules. This is why final rules on this project are so slow in coming, because they are very difficult. Next question. I know payroll must be no less than 75% to be forgiven. Is there an upper limit of payroll expense that can be forgiven? So can you have 90% or 100% go toward payroll?
Oh, absolutely.
As long as it's not yours.
Absolutely. Mm-hmm.
Not as long as it's not the self-employed owner, it can definitely be 100%. And I think if you received a 2%, a 2 times your amount, that would equal out to the amount that would be forgiven for a self-employed individual.
The key word there is minimum 75, but you can go higher.
I received a loan application for a dollar amount, but did not apply. Do you know if this is common, standard? Does it just follow PPP? Okay, I received a loan application number for a dollar amount, but did not apply. Do you know if this is common or standard?
So are they saying a lender sent them, they didn't apply for a PPP and they were sent an application, or they applied for a PPP and got a number that was different than what they thought? The question's a little confusing to me.
Yeah, I would go with the latter interpretation of that. Let's say, let's go with the latter interpretation. Let's say they maybe applied for an amount, but it came back at a different amount.
Yeah, and that's definitely probably on their lender, because if they remember when they were trying to do the PPP applications, a lot of the lenders were taking the actual documentation and proofing it against the loan request, and whether it's based on the actual payroll information that was provided to the lender, that they made the determination that the actual loan amount should be this based on the documentation, maybe different than what the application said.
Okay, John asked, and we had this on a slide that we didn't get to, John, but he asked about the Kern Small Business Relief Program that was approved by the Kern County Board of Supervisors yesterday.
They're getting ahead of us, Kelly.
They are really getting ahead of us, and we do hope to have a special webinar on that particular topic either next week or the week after, before the application process opens. It will not be on Wednesday, but here's the question: do you know if the new Kern County local PPP equivalent program will only be open to businesses who do not receive PPP funds? And I'm going to take that one to start with.
Okay.
And I believe the intent is to prioritize those who did not receive PPP funds. But the approval before the Board of Supervisors left open for some changes. Some changes that, SBA is probably finding they have to go to Congress to change now. So it'll be interesting to see. Originally, it was going to be open for 2 weeks for restaurants. There's going to be other non-essential businesses that, including salons, I think were mentioned, in several others that are open during that initial process. But we should have some information on that in the next week or two before the application process begins.
I would also encourage, I think there's 4 lenders, Valley, Republic Bank, Mission Bank, Valley Strong, and Alta Sierra. I think were the ones that were listed as the designated lenders for the county program. They may, in fact, have some more information on it right now. So wouldn't hesitate on reaching out to those lenders now.
Okay. So we'll have more on that. Great program. $25 million going out to Kern County small businesses. Be a real help. So a little bit more on that later. And Chris asked about the calculation issue for employees earning 100K or more. I think we covered that in pretty good detail. What about hair and nail salons? They've received money but have no employees. I have booth renters worried about how I can use the money. I think that goes back to your self-employed independent contractor rule, to where you are most likely going to be able to use for your salary as a self-employed to replace your salary 80% of the money for the PPP. Let's see. It's always fun picking these questions on the fly, but can you explain how sole proprietors can demonstrate payroll expense? Don't have formal weekly, monthly payroll. I think we just did that. Schedule C, 2 months of your Schedule C, multiply it by 2 times 5. Hate to throw numbers at you, but if your Schedule C on your tax return showed 60 grand, your monthly amount would be 5 grand. Multiply that by 2.5, you're up to 12.5. 10,000 of that can be used for your payroll. The other 2,500 needs to go elsewhere.
I think that's the easier of the calculations, Kelly.
Yeah, it was made really easy with this form and coming out with this information. Does employees at the time of application mean FTEs? I would think it does, because I think we're measuring everything in FTEs in this program.
Correct.
So, and there are, as we mentioned, multiple different ways of calculating your FTEs, and you are given an election, so please take advantage of that. Question on the transportation. What would it cover? Fuel, payment for a work truck, etc. From my standpoint of transportation has not been clearly enough defined. And hopefully final rules will come out and define what transportation is as far as a utility. And got nice questions on that particular. Are phone reimbursements currently considered utilities by everybody who's working it from home?
Well, if you look under the utility, what they're showing, they're saying phone. So I would assume you could, you're going to have to segregate out if you have a plan that has 3 family members and you're trying to do the full plan, then I think that's not going to be acceptable. But if you have a designated line cell number that you use with the business, and you have some documentation from as little as a business card to your website, and I would think that would be acceptable.
Great. Okay. Okay, here's a question about the alternative payroll covered period for biweekly or more frequent payroll schedule options. Beginning the 8-week period on the first day of my pay period, does that mean I am able to adjust my start date from receiving the funds rather than the pay period?
That's the safe harbor change. So it's when the pay period, you may receive the funds on a Monday, but your pay period starts on a Thursday, then your 8 weeks starts on that Thursday. That's a simple way to explain it.
So do we have 60 days after funding for qualified forgiveness expenses, or until June 30th? We got funded on April 21st. I'll take the first stab at this one. So on April 21st starts a 56-day period of 8 weeks and runs from April 21st, 51 days out. It won't get you to June 30th because May 6th does that. So that's probably 15 days beforehand, somewhere around June 14th or 15th. So you have 60 days after funding, or you can actually elect the alternative and take what aligns with your pay period. So maybe your pay period starts a week later on April 28th. You could actually start your 56-day clock at that time. Yes, this information will be available for those of you that ask. It'll come in a separate bulk email, either tomorrow or Friday. We have seasonal employees, and we haven't really touched much on seasonal employees. So here we kind of go. And the typical season ends on 4:30. They're ski instructors, so there's no way to rehire by 6:30. Is there a way to meet the safe harbor FTE requirements? Laurel, I'm going to take that question and I'll email it to you in more detail, since it is rather specific and I think it is kind of a longish answer. I will try to get you an email response to that particular question. I received electronic deposit from my business account for $1,000, which I'm assuming is an EIDL advance. I have one employee. I have not yet received any form of communication to confirm this. Is this how the applicants are being notified?
That's the proverbial ghost deposit. And yes, many cases I've had a lot of clients would call, hey, I got $8,000 deposited into my account over the weekend. What is that? And then we'll find out that it's part of the EIDL advance. So yeah, that's one way. You should have gotten some type of email after that, but yeah, that's the EIDL advance.
Keith, we have an employee that we furloughed in April and offered to rehire before we received our PPP loan. The employee refused to return to work. Do we need to document in writing signed
Yes.
by the employee?
I don't know if it has to be signed by the employee, but if you document that, yeah, signed by the employee's preferred. I mean, allows you to have additional cover. But under the safe harbor, along with the certification that you'll sign, they're making the assumption, one, that your documentation is correct, and two, you're certifying that it's correct. So I think you're going to be okay. It's just an added step. If you'd like, if the employee is willing to sign it, then have them sign it.
Can you add 2 part-time workers for the same amount of hours as a full-time? We had 1 part-time for 20 hours a week. Now we want to hire 2 back for 10 hours each. Boy, Ann, you ask tough questions. They seem so simple and innocent, but yet you get into certain things like the 25% rule of where you run into 25% less hours. So if you're hiring back the same 2 people, I still think if you have a 20-hour employee that you're going to need to offer them 15 hours. Here's a question on where we can find the last 9 webinars, and you can go to our Csub Sbdc YouTube channel. They're all there. So thank you for asking. Please help. I have no employees, but I need a loan. How do I get financial help? Thank you.
So are they asking for a PPP loan? Are they asking?
I think it's just a blanket ask.
First thing, I'd give you guys the plug, Kelly. They need to start with a consultant to really determine what they need. Is it for, working capital? Is it for expenses? I mean, you need to drill that down a little bit more, and no better way to do it than reaching out to a consultant. And then the consultant would determine, okay, are you eligible to go to your bank, depending on the size? Are you going to, you may in fact qualify for the new county program. Again, the devil's in the details, and you need to know a little bit more, but I think step 1 would be signing up with the SBDC.
And I think that you would be able to potentially get some financial assistance through the PPP program, or even, yes, through the PPP program, if you had self-employment income from 2019 that you can document on a tax return that you've either filed or will file by the due date. So again, it's that same issue of, say you show $30,000 of income on your Schedule C, then there's a formula that you can actually pay yourself for 80% of that you would receive. Yes, we're sending out the spreadsheets this time. Thank you for asking. Should a company open a separate bank account and then reimburse back to the company? So I think this is a separate bank account for tracking PPP expenses, Keith?
Probably it's about an 80-20 ratio. 80% of the customers I've talked to are in fact doing that. They want to make sure that they have separated everything. I don't think it's completely necessary, but that way you have clear documentation. So I would say yes.
Does health insurance count as payroll for the 75%, or does it count as other for the 25%?
Pretty sure that would go into the 25%. Kelly, let me see.
Well, let me take that one. I believe health insurance is actually part of the payroll calculation. It would be interesting though, because when I read this also, I was wondering how health insurance would work for an individual who's self-employed and has no employees. So that was where I was kind of hedging back and forth. But I would say going back to the Keith Brice rule, which is intent of Congress, and I think intent is to have health insurance. So I think it would count toward your 75% for payroll. Probably final rules will be beneficial for that question. I'm an employee of a professional corporation. In my application, I used my payroll figures in calculating total payroll. I did not include my monthly distributions. Would those distributions be includable in total payroll for the forgiveness application? So I'm assuming he's of an employee of his professional corporation, being an LLC or S Corp or corporation. So he's getting actual payroll figures. I believe since it would be a different entity of a professional corporation, I would believe you would use the actual payroll that you have actually received. You didn't include your monthly distributions. So I don't know what you mean by distributions, if that was just outside of payroll. I guess right at this point of the game, if you did a PPP and you didn't include the monthly distributions in coming up with your PPP amount, then I wouldn't put it in moving forward as for part of the total payroll for forgiveness. Again, I think in many of these instances, we need to go back to the original application and how it was filed and what payroll numbers or you used as far as either if it's payroll or other distributions when you did the application itself.
Kelly, the beauty of going on the Treasury website, I have confirmed that the contribution to the health and welfare benefits are in the definition of payroll cost in the calculation.
So that would be the 75.
That's correct.
Please confirm or deny whether an owner employee are limited to 850 seconds, so 8 weeks of their 2019 compensation for PPP forgiveness. From my opinion, I will confirm that, is that you are, you do get 8 weeks. You get 8 weeks but okay, you're an owner operator, so it goes back to what you report on the tax return.
Right.
So you're a Schedule C, and it's going to go back to that calculation. Because you can, in theory, pay yourself more than your business earns as an owner operator. Okay, gee, we're even running along for us, Keith. Okay, last question, and I'm sorry, I know there's a dozen more. My lender used a Schedule C net profit to determine my loan amount as a sole proprietor. Okay, that's correct. I was offered $1,600 or $1,200. I took the $1,200, which I assume does not include monies to pay expenses. Will or can the $1,600 be used as the self-employed salary? So that, for me, that looks like they were offered 2 times or 2.5 times their monthly income, of which they elected the $1,200, which I would assume would be the self-employed salary amount and would be the amount moving forward.
I agree.
Okay, it's time to wrap it up. Sorry we couldn't get to all your questions, but there's always next week. That's the beauty of this. It's the gift that keeps on giving. A free webinar next Wednesday. So thanks to Keith Brice for joining us. We will be back next week. We appreciate all your support and those that attended today. We will send that email out and we will get back to you. We'll be back next Wednesday at noon. Maybe we'll have more on the actual final rules for forgiveness. Maybe we won't. We're going to get into the FTEs, the full-time equivalents, much more. We might have a separate webinar on the current small business relief program or information on that. So for Keith Brice, I'm Kelly Bearden. Have a great afternoon. We'll see you next week. Bye-bye now.